Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SEAZEN Group Limited Annual Report. SEAZEN Group Limited offers a diverse range of businesses and services. At the core of its operations are property development and sales, focusing on residential properties and mixed-use complexes. The company also provides commercial property management services to cater to the needs of various clients. In addition to property-related services, SEAZEN Group Limited offers asset operation and management, information technology, and children entertainment services. This indicates a commitment to diversifying its offerings beyond traditional real estate development. The company's business scope extends further with the provision of business management consulting and pension services. It also engages in retail business, showcasing its adaptability to changing market trends. Furthermore, SEAZEN Group Limited has ventured into energy technology development, reflecting its willingness to explore new areas of growth. Overall, the company's diverse range of businesses and services positions it as a multifaceted player in the Chinese real estate market. SEAZEN Group Limited maintains a market capitalization of 15 billion, broadly in line with the industry peer group. SEAZEN Group Limited trades at a higher price-to-earnings ratio of 30 times, and a lower price-to-book ratio of 0.28 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 69% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually even though operating income have been improving. Although the drop in revenue is concerning, we can tell that management have been able to reduce cost. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. In terms of revenue growth, sales of properties, commercial property management services, and finance income have been significant contributors. The increase in these areas has led to an overall rise in the company's revenue. On the other hand, revenue decline is primarily driven by a decrease in contract liabilities, construction costs, and land use rights costs. A decline in pre-sales has resulted in lower revenue recognized from contracts, while decreased construction and land use rights costs have also contributed to the decline. These factors highlight the importance of managing these areas effectively to maintain revenue growth. In summary, understanding the primary drivers of revenue growth or decline is crucial for a company's financial performance. By identifying and addressing the key factors that influence revenue, companies can make informed decisions to optimize their operations and achieve sustainable growth. The company's net income experienced a slight decline of 0.04% due to fair value losses on investment properties. However, this decrease was overshadowed by significant improvements in profit margins across all regions. In Guangxi, Yunnan, Hubei, and Shanghai, profit margins increased to 12.13%, 11.79%, 12.62%, and 12.95% respectively. The gross profit margin also saw a substantial increase of 6.5 percentage points, rising from 16.8% to 23.3%. This upward trend can be attributed to two key factors: the rise in total rental income due to higher occupancy rates and increased rental income across all regions. Additionally, the company benefited from reduced net impairment losses on financial assets, administrative expenses, and selling and marketing costs. These positive changes contributed to the overall improvement in profit margins, indicating a healthier financial performance for the company. The company is generating positive operating cash flow based on various indicators. On page 34, it can be inferred that the company has a positive operating cash flow due to its gross profit and operating expenses. Similarly, on page 62, there is no specific information provided, but it is mentioned as positive. Further analysis of the financial statements reveals that the company has sufficient working capital and financing resources to meet debt within 12 months, page 129. This suggests a strong ability to manage cash flow. Additionally, an increase in loss allowance recognized in profit or loss during the year indicates a positive trend, page 182. Management's cash flow forecasts also confirm that the company is generating positive operating cash flow, page 198. The financial assets and liabilities of the company indicate a positive operating cash flow, page 219. Moreover, a decrease in trade and other receivables and prepayments from 2024 to 2025, page 225, further supports this conclusion. The profit before income tax minus adjustments for operating activities also shows a significant amount of RMB 1,441,111, page 263, indicating that the company is generating substantial positive operating cash flow. Overall, these indicators suggest that the company has a strong ability to generate positive operating cash flow. The company's debt level has undergone significant changes between 2024 and 2025. While the total borrowings have decreased by 6.9% from RMB 57,733,115 to RMB 54,758,188, there are mixed trends in different categories of debt. Long-term secured borrowings have decreased, but unsecured long-term borrowings have increased significantly. The net debt has also shown a slight decrease from RMB 59,252,180 at the end of 2024 to RMB 58,580,207 at the end of 2025. However, total debt, including trade and other payables, has increased by over 116% from RMB 1,432,590 to RMB 3,115,822. In terms of interest expenses, there is a decrease from RMB 3,581,526 in 2024 to RMB 3,380,819 in 2025. The total finance costs have also decreased slightly from RMB 2,982,154 to RMB 2,971,575. However, the net finance costs have increased by a small margin from RMB 2,903,885 to RMB 2,908,421. Overall, while there are some mixed trends in debt levels and interest expenses, the company's overall financial situation appears to be stable with slight decreases in both areas. The company's financial performance can be analyzed based on its various segments and regions. In terms of performing well, the finance income and rental income segments have shown positive results. On the other hand, certain segments have underperformed. Non-A share companies have been a significant drag on the company's overall profitability, with a segment profit/loss before income tax expense of minus 75,613 RMB 0. Additionally, the share of results from associates and joint ventures has also been poor, indicating that these investments may not be yielding the desired returns. These poorly performing segments will require attention to improve the company's overall financial health. Management is optimistic about the company's future prospects, citing an increase in gross profit margin due to higher revenue from commercial property management services and leasing. However, they acknowledge a valuation loss on investment properties. The company's strategy is driven by a steering committee that assesses financial performance and makes strategic decisions. Management has no plans to acquire significant investment or capital assets outside of the company's core business of property development. In terms of debt investments, the company will reclassify them when its business model for managing those assets changes. The company also assesses financial assets on a forward-looking basis to determine expected credit losses and has measures in place to mitigate price risk with regard to its investments. Overall, management is focused on maintaining a stable financial position while continuing to grow revenue through commercial property management services and leasing. The company has made significant transactions through acquisitions and divestitures. In terms of acquisitions, the company has invested heavily in leasehold land, with a notable purchase on page 222 for RM 875 million. 460,000 in 2024, as well as a prepayment for acquisition of leasehold land in 2025, worth RM bone billion, 96,958,000. These investments demonstrate the company's commitment to expanding its physical presence. On the other hand, the company has also engaged in divestitures, which involve selling off certain assets or properties. One notable example is mentioned on page 184, where the company forfeited customer deposits and resold properties to recover amounts paid to banks. While no specific amount or property is mentioned, this move suggests that the company is taking steps to manage its financial obligations and optimize its resources. The company has a history of paying dividends to its subsidiaries and non-controlling interests. In terms of dividend payments to subsidiaries, the records show that RMB 402,810 was paid out on page 122. However, when it comes to dividend payments to non-controlling interests, the picture is slightly different. According to the extracted summaries, in 2025, a total of 2210 RMB 0 was paid out as dividends to non-controlling interests. In contrast, for the year 2024, a significantly higher amount of 654,371 RMB 0 was paid out as dividends to non-controlling interests. That concludes the financial summary for SEAZEN Group Limited. Feel free to comment below, and I will be happy to answer them when possible.